What up, Hyperchange? Welcome to another episode. Today we are doing an epic interview about Augur, the decentralized betting platform that has recently launched on the Ethereum network. This is a project I've been following for years that is making huge strides, sort of at a big inflection point. So I'm really excited to actually have Tom Kysar, Director of Operations from Augur and the Forecast Foundation on the show today to help us break all of this down. Tom, welcome to Hyperchange.
Thanks for having me, man. Appreciate it.
Yeah, so I'm so pumped to learn and just get way over my head about Ethereum and crypto and hear about this whole world that you're all up to. So for those who don't know, could you break down just super high level what Augur is and sort of this concept of building something on top of the Ethereum network?
Absolutely. So Augur is, as a product itself, it is a decentralized and peer-to-peer prediction market. In other terms, it is a decentralized betting platform. It's a place where two people can enter into some sort of bet or agreement or contract with one another. But it's built on top of Ethereum, as you said. So essentially, all of the logic and the existence of Augur itself lives on Ethereum as a set of smart contracts and software. So there's no central owner of it. There's no business that operates these contracts or the website or anything that has to do with it. It's almost like it's kind of entirely owned by the people that end up using it themselves. Just because we develop it or we create the software, it's all open source. We have no more power or control or any sort of executive power over Augur or the software itself than you do, going on it and using it today. So that's kind of what the cool thing about Ethereum allows you to do is you can build these sorts of applications in a way where you can remove the middleman. And we can get into that afterwards, but there's a lot of benefits of being able to essentially remove that middleman, particularly from certain sort of businesses or services that exist. A lot of those middlemen exist to be, simply some level of rent seeking or some level of rent seeker, where they just kind of sit in the middle. They take their fee. They don't really provide too much. Sometimes they do bad things. Essentially, you give somebody centralized power or authority long enough, eventually it kind of becomes corrupt in one way or another. So that's kind of what
Yeah.
we need to do.
Big fan of this whole vision of decentralized systems, and Vitalik Buterin, this like crazy boy genius, gets super obsessed with Bitcoin, comes up with this Ethereum network. I wrote a bunch about Ethereum in my book like a few years ago, back when I was super into crypto. And this whole concept, like I was an investor in it, of like the decentralized computer of the world, able to run all of these applications. That I actually divested from Ethereum because it got like this huge spike to like 1 million transactions a day, then sort of fell down to 500,000 after that initial crypto craze. But now we've sort of seen it go back up. And to me, the value of Ethereum is always tied to what are the value of the dApps built on top of it, decentralized applications. And that's where Augur comes in, is you are one of the leading decentralized applications built on the Ethereum network. In theory, projects like yours are what give that Ethereum network value, or the first sort of tools and apps to be built on this new decentralized platform. So exciting. And so I'm curious if you could walk us through like the genesis of Augur. And then I know that there was a V1 launch prior to this new V2 thing that was sort of an initial beta test that went pretty well with some cool traction. So could you walk us through that genesis and then V1 launch?
Absolutely. Yeah. So Augur was initially founded by the two founders, Joey Krug and Jack Peterson. It was originally a thought of and started being worked on in like late 2014. And it was essentially piggybacked on a bunch of kind of academic work done by a couple guys, Robin Hanson, who did a lot of stuff in prediction markets, and some guys, Paul Stork, who did some early academic work on trying to implement this stuff on Bitcoin, on something called TruthCoin. Back in like 2014, Joey and Jack, took one of these kind of papers outlining the idea of you can create these forecasting prediction markets in a kind of trustless manner. And it was originally designed to be a fork of Bitcoin. So you can go on the internet still somewhere, and like there's the first Augur white paper ever published, and it's entirely spec'd out as like just a straight up fork of Bitcoin. And rolling into 2015, the idea of Ethereum started getting some, people started becoming more aware of it. It was still before Ethereum had ever launched. And in like late 2015, they had kind of formulated the idea of how they could run this on Ethereum. They ended up conducting, I believe it's the first token sale or crowd sale that happened, on Ethereum. It actually happened before Ethereum was live. And so in like late 2015, they did the token sale, and they sold these reputation tokens. And these are the tokens that still exist today and still are the tradable kind of token that you see associated with Augur. But the reputation token, essentially, anybody can purchase these, and it allows you to act as the human oracle of Augur. Essentially, you have the right to work on the Augur protocol and provide answers. So, with the decentralized prediction market, there's always the question of, well, who says, what the outcome of the baseball game was, or who says who won the presidential election. And there's a big process kind of behind that, and sort of a game theory setup of like how to optimally do that with financial incentives in a network. But essentially,
and actually, if I could interrupt before we get too much into V1, that is perfectly one of my questions. Is I love this quote of like crypto assets are just incentive systems. And so I'm curious at a high level, how does that incentive system work for Augur that you just mentioned?
Absolutely,
because you have these people who are checking to make sure the bets are right and done correctly and categorized. So,
yeah, the good crypto assets are, well-aligned financial systems. Yes.
I think that was a Chris Berninsky quote. He wrote the book Crypto Assets. I loved it, and I just since I heard that, I was like, wow, this is a beautiful way to think about it.
Yeah. So long story short, like in summary, the incentive system is structured in a way where presumably acting in accordance with consensus or with the rest of the rep holders that also exist with you will always be the most profitable decision to make. So essentially trying to extract the truth. Somebody can come in and lie. Somebody can stake some rep and say Hillary Clinton won the last election. The way the incentive system is structured is that if you are essentially not reporting with consensus, which is presumably what reality actually reflects, it is not going to be economically profitable for you to do so. So on the inverse, essentially, it makes lying expensive. If you come in and you try to perpetuate some sort of reality that doesn't actually exist in the real world, all the other rep holders have a financial incentive to come in and correct you. And if they end up winning that dispute, you lose all your rep. All your rep goes to them. And this is how the kind of dispute system back and forth works. There's essentially an initial bond that gets posted. If you believe that the initial report of a market is incorrect, you can take some rep, say, I think you're wrong. I think the right answer is X. Here's $100 for me to, stake on that. And that gives now a time for somebody else to come in and, give them the opportunity to potentially stake against you, for saying your outcome that you just said, is correct or incorrect. And essentially these bonds double and escalate. And there's a system where they keep getting larger and larger and larger and larger, eventually to the end of what we call a fork. And this is kind of the core of Augur's security model, which is that if this dispute escalates to a high enough level, it's currently set at about the final forking round is about 550,000 rep, which at current price is like maybe 15 million bucks, 17 million bucks. So if somebody's willing to spend, because you have to do all the rounds before it too. So it's actually like 25, 30 million. If somebody's willing to spend like 25, 30 million bucks and bring a market all the way to forking, essentially what Augur will do is the Augur Oracle goes, well, we can't determine truth here. There's two sides of the story. Then you're both willing to stake tens of millions of dollars on it. So it forks the reputation token into two different worlds. One world
like Bitcoin Cash.
Kind of. Yeah. It's like say it was the presidential market and there was disputed all the way to a fork. Essentially, Augur would at the end fork the reputation token and say, there's now two Augurs. In Augur over here, Hillary Clinton is president. Wow. And in Augur over here, Donald Trump is president. Now, if you want to use Augur as a regular person, you got to decide which version of Augur you want to participate in. And the theory behind it is that people won't want to participate in the world that doesn't accurately reflect what they perceive as reality because they don't have trust in that system. If I'm a trader, well, this Oracle resolved the market as Hillary Clinton. I don't want to trade there because if I trade on one of these markets, I don't know what they're going to resolve as.
Right? Like I'll make a bet on Apple price being this, and it was, but then they don't like reality, so then I'm not even going to get my money, even though I was right.
Absolutely.
So why would I start? Okay, really interesting. Love that breakdown. So you launched this initial product, I want to say a couple years ago. You put this out into the wild, and a lot of political elections, I think, was some of the traction. But can you talk to us about what happened when you put it out? Like how much money, it moved through the platform, that kind of thing?
Yeah. So, yeah, it took like 3 years of development to get it to the kind of V1 state. V1 launched in July of 2018, so almost 2 years ago, or just over 2 years ago now. It launched with Ether as the trading currency, so you had to use ETH to place your bets, and all your bets were done in ETH. But initially, I think it did significantly better than all of us ever anticipated. The user experience of it was relatively subpar. The process for accessing it was definitely subpar. You needed to download a local application and download the Ethereum blockchain and read from the chain. It could take upwards of three or 4 days to complete that process.
Right, like 0.00101% of people in the world could have any idea how to access this.
It was quite a painful process. Thankfully, technology's come quite a far way in the past 2 years with this stuff. At the end of the day, it ended up it effectively kind of died. It didn't die, but nobody really used it anymore about the beginning of 2020, the V1 version. And it clocked in at roughly 25 million, depending on how you benchmark the ETH price, of completed matched bets over
wow.
time.
So that's pretty impressive real world traction. Like this, theoretical betting platform schemed up by these academics sort of that you code onto this wild decentralized blockchain, and all of a sudden you put out in the wild and you're getting 25 million on the beta. Like that's some real money there.
Yeah, it was. I think we were all, definitely surprised by it. And I think the better version of it, the way we deployed it and launched it was kind of that we knew the actual user product was less than ideal. But it was also the first time we were deploying essentially this incentive system into the world. And when we say it's kind of like a beta, it was really like a beta for we need to ensure this incentive system that we've designed here and this reporting system and the way that we determine outcomes of events and everything is actually going to work. And that, that people are properly, driven to these certain financial incentives. And it's all these kind of levers and mechanisms. And it's you have to, people have to come in and pull things and report on things and do this and do that. And that ended up working beautifully. The product itself had, some problems in terms of the actual kind of website and software, just in terms of usability. But, a market didn't report incorrectly. It's a subjective thing to say, but there were no outcomes that were ever heavily disputed. There were outcomes that went through some dispute rounds, but they wrapped up pretty quickly. And no market resolved as anybody, a regular person would define as inaccurate. So that was kind of the big thing. And there was maybe 3,000 of them or so, 3,500 of them. So, it gave us confidence in the fact that at least this kind of incentive and token system that we've designed to be the blockchain oracle seems to be working. And that markets resolved correctly. People have the right incentives to come in and do the correct work. And, then we spent the kind of next 2 years, okay, foundation works. How do we make this thing, more usable by a more common person or a more common crypto person or et cetera.
And that's been the sort of ideation behind V2, which is now just launched, right?
Uh-huh.
Awesome. Congrats on that.
Yeah, thank you. It's been a bit busy week, but launched we're at 1 week, last Tuesday.
So could you give me an example of, and I'm just curious, my users, because this is all super great theoretical, but some of the fun, you must have seen some wild, quirky bets on this for V1 or maybe even in V2. What was some prediction market that was created that you weren't expecting? Was it all political, will Trump win, or there must be some crazy ones?
Yeah, I mean, so like all the like regular bases, obviously you see all the kind of the political stuff, the sports stuff, the financial stuff. Crypto markets did quite well on V1, which was somewhat of a surprise to us considering the accessibility of that everywhere else in the world. Essentially just betting markets on like, will ETH be above or below $200 by the end of next month?
Wow. So
Kind
it's
of
almost
like,
like an option market
yeah,
derivatives
exactly.
for crypto.
Exactly.
Okay.
But like very surprised on the amount of volume some of those markets would do when I'm like, there's tons of exchanges that offer a very similar service.
But then
And
the
then
flip
there,
side of that is that's probably a mature market because people are used to doing all these exchanges of,
absolutely, that too. Yeah.
0x, I think is like,
Yeah. Yeah. It's like, yeah, it's something they're slightly more familiar with. They don't have to, it's not like a new kind of, but that's what I think Augur is cool for is essentially the types of markets that it can enable that don't exist elsewhere. And we saw a handful of those on V1, a bunch of them. You get the kind of V1 was a bit fun because reporters needed to essentially determine like what is their precedent for resolving Augur as these things invalid markets, which is where like this isn't a market that can be resolved. Essentially, if you like make a market that says like, will my dog be happy tomorrow? Like that's just like not a thing. Like you can't resolve that. That's would be the definition of an invalid market. And there's
so
a
you
large
wouldn't let that, but how do you, if it's a decentralized platform and I want to create a market that says
Mhm.
my dog's going to be happy tomorrow, like what happens?
Oh, you can make it and it'll go on Augur and people can trade on it if they want to. But the idea is that reporters and the rep holders, when that market goes to
Oh, so you
reporting,
don't mean journalists, reporters. You mean rep token
oh
holders
yeah,
who
sorry.
you call reporters.
Yes, sorry,
Okay,
I should
gotcha.
make
No,
that
just to be
clear.
clear,
Yeah,
yeah.
when I say reporters, I mean rep holders. Yes, we call them reporters. They're the reporters for the system.
Gotcha.
Um, but yeah, they essentially, once your market resolves, they determine it as a invalid market, and they don't resolve it with an outcome. They say this market is null. It's invalid. This can't be resolved. This isn't a thing. Prediction markets, only work with things that really have a definitive outcome and something that everybody can kind of validate themselves.
And we'll all get our money back if that's the case. For all those
Um,
people who staked on my dog's market, which now has been invalidated, like what happens to all that capital in escrow?
so we handle it slightly differently in V1 versus V2. So in V1, the way that we did it was that essentially all the outcomes in the market got paid back a proportional amount of the money in escrow. The weird thing about Augur too is that when you trade on Augur, you essentially get you get an ERC20. We call them outcome tokens, but it's essentially a tradable token that represents the outcome in that market. But you can go take that token if you want and trade it not on Augur. So Augur doesn't really know how much you paid for that token. All it knows is that we've issued an outcome token for
Uh-huh.
1 cents. So we don't have a way of determining like if Augur doesn't have a way of determining if you actually purchased this on Augur or you purchased it on Uniswap or another DEX or somewhere else. They're freely tradable tokens. So in V1, the way it worked was it would if it was a yes no market, two outcomes. If it was invalid, everybody gets paid 50 cents. So and that was not an ideal solution in hindsight because if you ended up buying that share for 75 cents, yeah, you lost 25 cents on the share. You only got 50 cents back. But if you bought it at 35 cents, you make 15 cents per share on it. We'd essentially split it, between the equal amount of outcomes in the market.
Hmm.
And in V2, the way we kind of fixed that and made that better was all markets have invalid as a tradable outcome itself now. So you can go on Augur V2 today, and if you think a market is going to be invalid, you can just now directly purchase invalid shares in that market. And if it ends up being invalid, those invalid shares resolve to one, just like any other outcome on the market would. So yes,
Oh,
no market,
fascinating.
like yes, no, invalid. And if it's an invalid market, you can buy those, and that's kind of used as a signaling proxy now to the public. Whereas if invalid is presumably trading at anything over 1%, like you should take a look at that because that means somebody's willing to purchase invalid, at a price. Somebody has a reason to believe this market is invalid. And we use that as kind of a filtering technique now too, to hopefully, we ideally want to hide as many invalid markets from people as possible. Without us, we can't sit here and curate these markets either. So they need to kind of be filtered in a programmatic way. So V2 does this thing where essentially, if invalid has a profitable bid on it, the client will hide it, because we can make a reasonable assumption that that market will actually be invalid, because somebody's willing to buy invalid shares on it. That can go a little bit deeper too. You can like essentially buy insurance against your own positions with that too. But yeah,
Wow. I mean, the possibilities here are just so mind-boggling. And on one end, you're calling it like this decentralized betting platform. But when I was watching some other talks about your team members, it was like this idea where you could hedge financial assets, protect wealth, and sort of, yeah, okay, sports betting, political betting are one things, but it's really a platform for any kind of prediction market. And you're building this wildly complicated incentives system to handle that. So I'm kind of curious if we could move into like the valuation of Augur and just what Augur is. Like to me, this is the real fascination. Crypto assets, not a company. It's not a cryptocurrency. It's a crypto asset. It's a decentralized network that's built on top of this other network, which is Ethereum. Like it's so kind of confusing. And there's the rep token holders. So you do an ICO of this rep token, which you have to own to have access to participate. But that's different than equity in the underlying corporation, which is
Forecast Foundation.
the Forecast Foundation, which is the actual like, LLC or whatever, which you run. So can you break down that entire structure of sort of like what it is? Because there's a company somewhere, which is the Forecast Foundation, I guess.
Yep. There's the Forecast Foundation. We are a privately held Estonian company. It is the company that has been existing since 2015 to date. So the slightly different thing about us is that we're not a registered nonprofit, but we operate in a not-for-profit sense. Meaning, since the original crowd sale, we've never made $1 in revenue, and we don't intend to. The entire business model was essentially to raise that initial capital, and then use that initial capital to develop Augur, and that's it. We don't take fees from the protocol. We don't take, we don't charge for services. We don't do anything. We are essentially a group of collective, nonprofit open source software developers building Augur for the public. So on paper itself, the Forecast Foundation is, arguably and relatively worthless. We've never sold equity to investors. I think our equity on paper is worth like 2,500 euro or something. It's like there's no actual business here. It's we raise the initial amount of capital and we see it as like kind of like a nonprofit treasury. That's our treasury. We manage it, and we essentially only deploy that capital on paying engineers that develop and build the Augur software. And at some point that will go away, and we will be gone. And we won't have there's still some lifespan on it, but there will be some point in the future where the Forecast Foundation just disbands, and Augur, everything's open, everything's public. The hope by that point is that I think we could do it today and like it would be okay, but the hope is that years from now, when that does happen, Augur has built such a community and network around it that it can survive in a way similar to kind of how Bitcoin survives today.
Wow, that's pretty crazy. So, and that initial capital that came in was from the REP token sale, the rep token initial coin offering, and then that capital goes to that you issued all of these tokens. And so when someone's buying in the rep token, I guess this is what I'm getting at as sort of my investor brain, like I'm not buying equity in the Augur company. It's
No,
different than that.
absolutely not.
But I am there, I've seen Multicoin Capital put out a very, couple year old, but very thorough investment thesis for Augur. There are people who do invest in the rep token to get an increase in value because the network will go up. So to me, that's where I think it's interesting of like, I'm not investing in the company where like MakerDAO, I feel like I'm investing when I invest in that MKR governance token. I feel like I'm almost investing in a share of like the governing company startup.
Yes, absolutely, because you get some level of governing rights over the Maker protocol with that. With Augur, you don't get governing rights over the protocol. You essentially kind of get like you could almost kind of think of it like a taxi medallion for Augur, or like it's like a work license, like a work permit. It's like you now have a permit to perform work for Augur and get paid for it in return. But there's you can only do that if you have rep tokens. If you don't have rep tokens, you cannot perform work and get paid for it.
Yeah. And you
So
would get paid for it by like transaction fees on the network, this whole incentive system. And the
correct, yeah,
theory is
there's
if,
trade.
yeah, trading fees, I guess. And so if way more people are using the network, it goes from 25 million beta to like tens of billions of dollars. All of a sudden, assuming there's no massive dilution in that medallion count, the value of those medallions, the price to pay to play in this ecosystem will greatly increase in value potentially. I think right now it's maybe a 250 million dollar like outstanding network value for the
Correct.
rep coin, something around that.
Yeah.
But so it's like, okay, well, you can start to calculate, well, if they're doing tens of billions of transactions on the platform, taking this much fees,
Yes.
you can try and triangulate a value for that network, and maybe it's 10 billion, and if you buy it in at 200 million, there's huge upside. But it's different than buying equity in Augur. And I don't know, I think this is kind of something to talk through that, like, for me is even super complicated. I have no idea if it makes sense to other people, but like, I think we're at just sort of this new paradigm of like just buying stock in a company is not, that's a really, really way too simple way to think about how to like sort of invest in these crypto projects. Because, yeah, I don't know if you have any.
Yeah, yeah. Kind of the way you think about it is like, yeah, I mean, you're investing in, or you're purchasing, and the value, technically, the value of the rep token is derived by the amount of usage of the Augur protocol. So as I said, the Forecast Foundation, we don't take a fee or anything like that, but there is a trading fee on Augur when you trade. However, that fee goes entirely to rep holders and reporters, and that's the model of it. So, like in a traditional kind of sports book or financial exchange somewhere, somebody runs that exchange, takes the fee, that's their profit, that's how they make money, that's how they go and raise investment. That's
Yeah.
their flow, that's their everything. We've essentially taken that and instead directed that entirely to the rep holders themselves.
Yeah.
So, if you are a rep holder, you are, and you come into Augur and you participate, you are paid your fair share of the Augur network's trading fees, versus somebody who would run an exchange takes those trading fees themselves. All the profits, all the upside, all the benefits of anything that happens on Augur, essentially one way or another, kind of gets given back to the reporters themselves. Because at the end of the day, they're the ones that really ensure that the protocol stays running and that things stay working, and that they're like the employees of Augur. Like that's the real team. Those are the people that ensure markets resolve correctly. Without markets resolving correctly, you don't have traders. Without traders, you don't have trading fees. Without traders, you don't have market creators. It all kind of funnels back at the end of the day that you need some people coming in here that properly perform the work that is needed in order for this system to run well and be kind of a well-oiled machine. So yeah, I mean, reporting fees. There's a kind of a complex mechanism for how reporting fees are actually determined, the rate, but it scales with the amount of open interest in Augur. So as more open interest in Augur, gets into Augur, the reporting fee gets higher, and thus more of the fee that traders pay end up going back to reporters. But that's like
Gotcha.
the only fee that exists really in Augur. There's a market creator can designate a fee as well, but that's generally been a race to the bottom almost. At the end of the day, there's really only a reporting fee and the Ethereum kind of transaction fee. And that goes back to the reporters. That's another way to think of it too. It's kind of like you're paying a transaction. It's kind of like how on Ethereum you pay a transaction fee and that goes to the miners. It's
Yeah.
kind of the same thing here, but you're paying a transaction fee, and like the rep holders are like the miners of Augur.
Yeah.
They're the ones that are kind of laying the foundation and keeping everything going.
And I'm glad you said that because I was worried you were scaring me and people for a sec, being like, yeah, like we got all this money, then we're gonna run out, and like But
No, no,
it's
yeah,
like there's this system there that is designed so that as it'll operate itself, like the Bitcoin, they pay the miners. There's no they don't even have that foundation to help them. So really cool. And what I thought was and actually let's dive into that the gas costs, because this is to me the biggest friction of Augur's adoption will be rising gas costs in the Ethereum network. So Ethereum booming back up past 1 million transactions a day. Awesome. I've also noticed the price of gas is going up. I've also noticed the price of Ethereum is going up, and gas is priced in Ethereum. So the USD price of gas to run it, basically the gas is like you said, that
twice.
yeah, that fee to pay transaction on the network is big because this decentralized network of computers is still kind of new and in beta itself. It's not ready to handle 50 million transactions a day, running them instantaneously, super cheaply. So, to me, the biggest barrier for Augur's adoption is I have to pay I have to pay this fee on the Ethereum network, the gas fee, which is that's a whole podcast to even explain what that is.
Yeah,
But
yeah, yeah.
and then the transaction fee on top of that. So how are those fees doing? And you're getting some traction. So obviously there are people able to overcome those. But what's the
Yeah.
kind of current fee status?
Yeah, and I mean, to put it into comparison, the rep reporting fee is, if you compare the rep reporting fee to the Ethereum gas fee, I mean, it's almost non-existent. If you're like doing it like percentage wise, I mean, the reporting fee through V1, I believe, was like 0.15%. I think on Augur right now for V2, it's in that similar-ish ballpark because it's based on the amount of current OI in the system. But so, the real barrier is Ethereum transaction fees. You're absolutely right with that. Particularly now as well. Again, yeah.
Because you're building all this cool stuff for Ethereum, so now everyone's using Ethereum, which is making it harder to use the cool stuff you're building.
Absolutely. And the more that people want to use Ethereum for whatever reason that is, whether that's using decentralized exchanges or using applications like Augur or whatnot, it's more demand usage for it. People are willing to pay higher prices in order to get their transactions confirmed. And it's just a perpetuating, upper kind of cycle of making transactions more and more and more expensive. And it's, it's at the point where it's definitely, I think it's an issue for everybody that's building on Ethereum. There's essentially two solutions, or there's like two roads of the solution. So there's the camp where you can essentially bank on Ethereum solving this themselves. So this is kind of the ETH 2.0 discussion and everything that's going on.
Yeah, I'm curious if you have is that happening or?
Yeah, I mean, I've followed it a bit. I know they're doing some like beta stuff, I believe next month, in a couple of weeks. I don't know if that has, I don't follow like the markets too much, but I would imagine that maybe has something to do with the current Ethereum price as well. But I know they're making, strides in getting a working prototype live.
My theory is this entire, this might be a skeptical view, but this is why I got rid of my Ethereum, is I was just not seeing the ability to, okay, Ethereum's worth 40 billion. Like, you better be processing billions of transactions, tens of million a day, but you're at a million a day and this whole thing's breaking. So,
Yeah.
You know what I mean? Like, to me, the valuation of Ethereum is pricing in infrastructure that could do 50 million transactions a day. They're struggling to do one. So this is the biggest roadblock for everything on Ethereum, is like, and I don't even know if it's even worth discussing because like they got to figure it out. But I guess the flip side, what you brought up as an interesting point, is like, maybe you can do off chain. So instead of doing like every transaction runs through Ethereum, if we can bunch them and every 1 through 100, we just, are only paying 1% of that per fee. So, or per transaction.
Yeah, that's like, yeah. So it's like you can either, rely and depend and pray that the Ethereum core developers figure out some, scaling solution, or have a successful migration to proof of stake, or et cetera, and that you could do a whole thing on, that type of stuff. But I think the more realistic short-term option too, and stuff that's actually making pretty good technical advancements in like the like very recent future and short term, and it's moving quite quickly, is yes, this idea of like layer 2, which is the like off-chain level of transactions.
Yeah.
And there's a bunch of different approaches to it as well. And essentially you need to decide what sort of trade-offs you're comfortable taking when you're incorporating a level 2 solution, because inherently with a level 2 solution, it is not going to be as decentralized or robust as settling everything on chain. And that's why it's able to be cheaper. For the most part, like a layer 2 solution is some level of a like kind of federated network.
Like, you want speed and you're sacrificing trust, basically.
Sure. Absolutely, yes. And it's like a sliding scale of how much trust are you willing to sacrifice in order for speed and cheaper transactions. But essentially, so, there's some solutions that are, will give you, every transaction you could ever want, and it's free because, yeah, it's like 3 guys running some AWS box somewhere, and there's no like security guarantees at all. And then there's some more recent developments of stuff where essentially you can have this kind of like federated network of, a couple dozen, couple hundred, a couple thousand node operators running, validating transactions in a lesser decentralized manner. However, it can inherit the essentially security guarantees to a level of Ethereum in such a way where if there's malicious behavior that happens on this lesser trusted network, any participant of that network, the users, can essentially point that out and call it out. And it essentially kind of freezes that state and forces it to go back to Ethereum and
Wow.
forces it to go back to the actual decentralized network and resolve what happened here. It force exits everybody. So there's different ways of implementing that, and they all kind of have slightly different, trust profiles and stuff. But they're making relatively good strides on it. There's like, I don't know if there's an exchange today that's quite good. There's Diversify, which I believe is Bitfinex stood that up or something, and it uses one of these. There's things like Loopring today as well. There's a handful of them that are definitely live. They all have slightly different security profiles, but I think there will be one of these solutions that has a security profile that is suiting and fitting for Augur. Arguably, Augur, at least in my perspective and kind of our perspective developing this for the past couple of years, has been that the primary thing we solve for is a decentralized, censorship-resistant, peer-to-peer prediction market. In the sense of that, decentralization and censorship-resistant is the most important thing here, because without those two things, you open yourself up to, somebody not liking what you're doing and trying to shut you down, or bad actors, or malicious people, or et cetera. And I don't think every application by all means needs like extreme level censorship resistant and decentralization. A lot of applications don't, but I think there are a handful of them that do. And so it's a matter of picking one of these kind of layer 2 solutions where you can get that sort of instant confirmation speed. You're paying like a penny, 2 penny per transaction, and still get a security guarantee where if something goes wrong over there, we can all go back to Ethereum really quickly and essentially settle our dispute back on Ethereum in a way where that censorship can't exist anymore. So there's different ways of approaching it, but they're all getting quite good. I think we're going to see a lot more of it. Give it like another in the next 3-6 months, like application wise, you're going to see a lot of like dApps that today moving to some level of a layer 2 solution, because they're actually getting to the point where you can have really good security guarantees. Unlike the past 2 years, we've always been kind of talking about it. Security guarantees have always been quite bad, but they're getting good now. It's just kind of complex and difficult level of academic work, and then once you kind of validate academic work, they have to go implement it in the software, and then they have to go test the software. It's just it's a long process, but I've been quite impressed, at least in the developments that some teams have been making in that.
Yeah, it's a great answer. And I guess the flip side to my skeptical take is the bigger the problem, the bigger the opportunity. Augur already got 25 million people doing it with Ethereum in V1. I don't want to say sucking, but in the earliest, crappiest form. I would agree with you. And so you're already getting, you know what I mean? And it already kind of worked. And so pace of innovation here, my bet is they will figure this out. There will be a decentralized computing platform that can run 50 million, whether it's, ETH with some layer 2 or whatever. But you guys it's already working even with the current tech that's only getting better, which I think is awesome. So let's move back to this awesome future vision, because as I was researching Augur, the thought that really was okay, this could be huge, just a huge piece of the digital world and economy in the future, is this idea of you can Google the future. And not about how much money you can make, not about what you can bet on, but the information I can access and view because of your platform. I was just Googling today, okay, it's all about Donald Trump, the 2020 election. Okay, I could bet on that, but I could also use the wisdom of the crowds to get insight about what humanity's collective wisdom thinks is going to happen in the future, which is all of a sudden, I guess equity prices are that as well. Tesla's price is a fundamental reflection of what the market thinks will occur in the future for the company. And so, but this to me is a weird, could you fill us in on this whole Google the future kind of concept? Because I love where this is all headed.
Absolutely. Yeah. That's kind of where the business name comes from too. The Forecast Foundation, forecasting. And this is the root of where these ideas have come from and been developed off of. But yeah, it's the idea that these markets, if you have truly open and transparent and decentralized prediction markets or markets. When I say prediction markets too, I mean, a prediction market isn't much different than a traditional financial market or a current betting exchange market or a handful of these types of markets. They're all kind of fundamentally very similar in concept. But if you have a truly open and decentralized prediction market where it's not living within the control of the New York Stock Exchange or somebody else who implements external forces upon that market. If it's truly open and decentralized, the thought here is that you, one, can have markets on anything, and then two, when you have markets on anything, the reflection of the market is the best indication we have of what the crowd or these participants believe to be the probability of that outcome actually occurring. Because the way it's priced too is that essentially all outcomes resolve to one. So they trade between a range of 0 to 1. And in between there, and whatever it trades at in between there is it's the implied probability in terms of odds. So it's just regular kind of betting odds, but you convert it to implied probability. And so you look at a prediction market or a betting market for the upcoming election. I think Donald Trump's trading at about 40 cents right now for re-election. There are millions of dollars that have been bet and staked, at this line and at these markets. And, what is a better way to actually extract what people believe to be the truth and their true beliefs out of them, other than making them put their money where their mouth is, essentially. Bet on it. When somebody bets on something, I mean, that's, it's not some guy just kind of, there's a difference when some guy goes on Twitter and just shills his opinions, because if he's wrong, there's no repercussions other than, maybe people think he's dumb for a day or two, but then they forget about it. With a prediction market, you put that money down on that outcome. If you're wrong, you lose that money. So it's a much stronger way to actually pull these signals out. And this is the idea is that, once you have markets on anything with this, you can arguably get the best indication of what the world believes, these outcomes occurring is by letting them trade on it. You essentially give a venue, you make something exist that can kind of collectively aggregate all of the random bits of information and entropy and insight that different people have in this world. And you're giving them now a financial incentive to share that insight with the rest of the world through a market. Essentially, if you got special insight on one thing, or you're a domain expert on this or that, you can go and bet on that now. And if you're right, you're going to make money. But the byproduct of that is you're signaling to the world that expertise that you have, or that knowledge that you have through the market. And that results in essentially, you can look at these prediction markets and the different outcomes, whatever price they're trading at. It's a very good proxy of what the world or these market participants believe is the accurate probabilistic chance of that market outcome occurring itself. It's it comes from the idea of the wisdom of the crowds. You ask a large crowd of people they're a question, and you take kind of some level of an average of their answer, and it in theory is going to be a significantly more accurate answer than asking one person that is deemed to be an expert in that field of such. And that's kind of where the idea of prediction markets come from, is take all that wisdom that exists in the world and sum it down to one number in one market, and let that be the signal to the world of what everybody actually thinks is truth and what the current state of things are. And historically, they've been quite good. Betting markets did a bunch of weird stuff in the last election for a bunch of different, they're not perfect either. Absolutely. It's at some level just an indication of what the human population believes. But I think, as we all know, we can be wrong too, a lot. But for the most part, it's the best way that we have to attempt to signal these insights and this information, at least today in the world, in a way where there's some level of conviction behind it. The people have skin in the game. It's not just you don't have to parse, people's just kind of arbitrary opinions. You don't have to like try to validate, does this person know what they're talking about? Do they not know what they're talking about? You can to some level, but it makes it a lot easier to do that if someone's like, I have X opinion, and guess what? I just put $20,000 on it, and you can see it right there.
Here's
You're like,
the
oh
here's
wow,
the chain transaction, on chain transaction from my
right
wallet.
there, and like you can see it, and you can go trade on it. And I'm like, it's in that market. And guess what? When I'm right, that $20,000 is going to be $60,000. So I'll see you in 2 months. But like it's a much better way to signal how strong of a confidence level you have in your information and how you give that information to the rest of the world, essentially.
So, do you think in the future there will be some sort of like search engine-esque feature where I could ask Augur what is going to happen in the future and it will tell me what the crowds are thinking about it?
Oh yeah, I mean, you could arguably build it, today with like the markets that exist on Augur. I just don't think Augur's developed enough to the point where you would have an interesting, vast array of that to make like a search engine, like a kind of like a fun thing to use. But even political stuff today, yeah, sure, you can go like do the homepage of Augur, and that's arguably like a search engine for who's going to win the presidential election. And it's kind of a search engine signal for what the Ethereum price is going to be at the end of next month. They're trading on that. Anything that these people are trading on. And once it
Fascinating.
matures, yeah,
So,
like
I've been like thinking I'm like, part of me doesn't want to ask this question because it's so dark and messed up. But the second I heard about what Augur was, it was the first thing that came to mind, which is, what if someone makes a prediction market that someone will die? And all of a sudden you have created a real world incentive to kill someone. Like, this is really dark and twisted, but when I think of decentralized, decensorship, wild, billions of people using this all around the world, huge amounts of money, some sci-fi future in 2035, like, this could get really weird in a lot of ways. If so, how do you, I'm sure you look like you're totally ready. Yeah, yeah.
well, no, I mean, yeah. It's like, I think the reality of this is that one, just because something is decentralized and peer-to-peer and exists in such way, doesn't mean that it doesn't exist in the real world and that laws still don't apply to it. You know what I mean? Like anything that happens on one of these things, like these people still live in the real world and real world laws still apply to them. Just because it's decentralized doesn't make what you're doing, inherently a legal thing or not a legal thing. And in practicality, I think what ends up actually happening here is that it's just one, in terms of actually creating a real world incentive for something as such. We've never seen that in practice actually happen. So I'm less bullish on the idea that that incentive let me put it this way. I'm less bullish on the idea that a prediction market is the most efficient way to attempt to accomplish some level of a goal like that, if that were to be your goal. Because arguably I could set up a Bitcoin multisig and do the same thing as well. Set up a Bitcoin multisig and say, hey, send me a bunch of Bitcoin, and when it reaches X amount of thing, essentially send me a bunch of Bitcoin to a multisig, and then if X thing happens in the real world, commit proof to the multisig that you did X thing, and we'll pay you out the multisig. There's a million ways you can do something like this. But this has kind of been a thing or a narrative of prediction markets as well too. Just because it fits and you kind of think of it when you think of that.
Yeah, I think of there's a gazillion weird theories
Sure.
I have of really messed up things that could be bet on. I don't know. But another, maybe going down the dark end's a bad idea because there's so many good things you could bet on as well, and exciting opportunity. But just the level of where and the directions that this could go it's mind-boggling.
Yeah, and at the end of the day, the way we view it too is that we're creating Augur as software and Augur as a tool, and inherently almost all tools that have been created and invented, can be used for nefarious purposes if somebody intends to do so.
Yeah.
Somebody can write a ransom letter with Microsoft Word. Somebody can beat you over the head with a hammer and kill you. Anytime someone kind of invents something new, there's always a way that somebody can use it for a nefarious purpose. And at the end of the day, it's a matter of is that practical? Is someone actually going to do this? And if you really, in like real actuality today, I mean, blockchain analysis has gotten really good. I would not recommend people to do nefarious things with, the state of current
Oh yeah, like
Ethereum.
Chainalysis or something.
Yeah.
It's like a whole company the FBI is
Oh
paying
yeah.
like millions to track every blockchain.
Oh yeah.
It's
Oh
like,
yeah.
dude, like that.
If you think you can like really like hide on there, like I mean, it's an open, transparent, public.
Right?
We've
Like
been
the
saying this
joke,
for years.
right? They're like, "Oh, Bitcoin's great for like fraud and crime." I'm like, "Dude, like like
It's like
everything's trackable." Like it's the word.
yeah, everything's
Like, dude, if
trackable,
you're doing
like,
crime or like anything like that, dude, use cash, bro. This is a way better technology to
absolutely.
get away with it.
That's I think that this was like the early Bitcoin thing too. I got into Bitcoin like 2014 or 15. And everyone's like, well, like Bitcoin's used for like money laundering, terrorism, child porn. It's like the three things that like the golden trio of when a government doesn't want something to exist. And it's like, but like, guess what? Like, it even if that were true, which it's not, but even if it were true, you can track it all and you can see all of it. And like, what, are you going to tell me cash has never been used for it? And like, how do you track cash? You don't. It's like you're never going to like stop like in theoretical bad things from ever potentially being able to happen. But like, we can put them in different systems now. And like, guess what? Like from like a perspective of a government or a regulator, like you should want your criminal, like, money launderer or drug dealer to use Bitcoin instead, because you can arguably track him significantly easier than you can tracking him, like carrying duffel bags of cash around. Like you can't track that at all. And like, guess what? Like fiat currency has been used for illicit purposes forever. I mean, that's
Since day one.
The primary purpose of like fiat. Who else uses fiat currency nowadays? You know what I mean? Like actual paper currency. Like nobody. What do you mean? You know what I mean? Like outside of some $20 from the ATM, like, who uses $100 bills anymore? It's just not a thing. Use your credit card. Use your whatnot. So yeah, I think they people can attempt to say that technology can be used and like this is scary and this is bad and this is and it's like, I mean, if you're gonna take that line, sure, you can take that line, but like also everything else in the world is like nearly just as scary and bad and used for like just as many of those purposes as well.
We're almost done. I want to wrap this up with the final question about Augur. You just launched V2. How do people go check it out? How many users? How much money? Can you give us a couple stats about the launch or just get us pumped? Augur.net, I believe. But what's up with V2? What's the status?
Yeah, so V2 launched last week. You can kind of see everything and be navigated to the application itself from Augur.net. It runs on IPFS. So you can use it in your browser now with IPFS, and it syncs in your browser. You don't have to download a blockchain anymore. You don't have to download software anymore. It loads really fast. It's quite nice. UI is much better. And
I had to check like an agreement because I was in the US or UK. There's like a couple disclosures you have to check. Is that what's up with that?
That's just from the Augur.net domain name. So essentially we own and we operate Augur.net. It's a centrally owned website. We own and operate it. So, we have some level of obligation with Augur.net itself. And we're, redirecting you essentially to a deployment of Augur on a peer-to-peer distributed network, IPFS. Okay. And Augur itself is entirely open source as well, too. You can go to GitHub, download the code, and run it locally if you would like as well. But this is just kind of, us redirecting to people to IPFS is kind of like a convenience for using it. But at the end of the day, it's still all open source software. Anybody can download it and run it locally on their computer as well.
Amazing. So Augur.net, people can play around. I think this is so exciting. Like I've, watching Ethereum come out, this become a Dapp. Now you've actually launched it. Now it's in the wild. Like I don't know if Augur will be the thing that is this decentralized prediction market that takes over the whole world, but I think one will. And you and your team is ahead of the curve in leading this charge. So that's why, $200 million project with tens of billions of potential, like so exciting and fascinating to follow. So I'm super, super pumped that we got to like do this interview. And thank you so much for the time. Cause I'm like, I just can't wait to see, how this all evolve in 2 to 3 years where you're at.
Absolutely. Yeah. Thanks for having me. Yeah. At the end of the day, it's, we're doing everything we can to try to make something like this exist. But, at the end of the day, we just want something like this to exist. If it ends up being something else or someone else or somewhere else, like but we've contributed to that process to make it exist or help it exist, in one way or another as well. It's like, and I think this is kind of this is the core ethos that, got maybe missed a lot in like the 2017 hype cycle and stuff. But, there's still a handful of us around that are like, yeah, we want to make like cool things that exist for the world itself. But yeah, Augur.net, this was super cool. Thanks for having me, man. I really appreciate it.
Yeah, thank you so much. Can't wait to keep watching. All right, peace out, everybody. Bye.